In this video, I will be speaking about Euro CHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, and by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we have is a market which in the moment is testing a quite strong level of previous monthly resistance turned support here, and at the moment again acting as support at this level. So as we're testing previous monthly resistance turned support, we could expect bullish price action to be created away from this area. Dropping down on the weekly time frame, what do we see? Now, here in the weekly, if we follow the natural movement of the market, we had an impulse correction, lower low and equal high. Now, in general, when you see an impulse correction, lower low and equal high, after that you would expect short-term bearish price action and then longer-term bullish continuation, essentially for the creation of an inverted head and shoulders. So again, since we are currently at the right shoulder area, from which we could expect a potential rejection to the upside, bullish price action could be expected, also from a weekly perspective, away from this zone. Dropping down on the daily, what do we see? Now here on the daily, this is where things get very interesting. In fact, what we can notice is that during all this impulse to the upside, there is one candle not related to the move, which is exactly this red candle here, which shows that at this area, the market found resistance, even though it was in a very strong bullish, even though it had during that move to the upside, very strong bullish momentum. This means that this zone was very strong resistance because anyway, even though the market had all this bullish momentum, it anyway made the market create this red candle, meaning that now this previous resistance, since it has been broken to the upside and is getting retested, is acting as support. So here on the daily, the market is currently testing previous daily resistance turned support. We can also notice how in creating this move to the downside, the market is also printing an M pattern, and in general, after the creation of an M pattern, what you could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance, so getting weaker. This means that there is definitely the possibility for a potential rejection to the upside away from this area and for a potential completion of this M pattern here from a daily perspective. So the way in which we could be approaching this is, as usual, being reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of the M pattern at the neckline. And if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.